All right, so now we're going to do our last topic in the accounting unit, which is cash flow statements and interpreting these statements. So you'll be successful when you can explain the purpose of a cash flow statement, list and describe the ways in which a company can increase its cash flow, and be able to create a simple cash flow statement in class. This is the contents of what we will be going through today. So what is a statement of cash flow? Cash flow itself is the movement of cash in or out of a business. The cash flow statement is a summary, essentially, of all the transactions that specifically are involving cash that are coming in and out of our company. Cash flow statements are made in order to predict whether we're going to be able to pay off future obligations. Do we have enough money to cover our debt? All right, to see an example of a projected cash flow statement, you can turn to page 293 in your textbook. So, what are some ways we can increase our cash flow? So increase the money we have. We can do things like increase the price of our goods, which might also have a negative effect if some of our goods are price sensitive. We can minimize our costs, so we can try and have less costs. We'll find better suppliers with lower prices, so we'll have more cash. We can spread out our expenses. So instead of paying everything maybe up front, we'll try and pay in installments instead of making one single payment. And we can do something to reduce our inventory because this will help us save money. And we can review something called a just-in-time inventory system, which is when we get inventory pretty much right when it's going to be sold. So we know exactly how much we need. So we can also collect, continuing on with the increase of cash flow, how can we increase it? We can collect what is owed to the business earlier. So make sure that we're collecting debts from other people. We can shorten the deadline of our accounts receivable. Accounts receivable are when someone buys something on account, so they haven't paid for it yet, but we've given them the goods or the service. So they still owe us money. So we can try and encourage them to pay us earlier, maybe give them a discount if they pay us earlier. We can try and stretch out the deadlines for when we have to pay off our debts. So if we bought something, a service or a product on account, we still have to pay for it. We still have to send them the money. So we can try and stretch out that deadline. So remember that cash flow and profit are not the same things, all right? Cash flow is really just the difference of money coming into our business and money leaving our business. Okay, so come to class being able to tell me what a cash flow statement is, what the difference between profit and cash flow are. You should also be able to explain the purpose of the cash flow statement and list and describe these ways that we can try and increase our cash flow, increase the cash that we have. And in class, we're going to try and create some simple cash flow statements.